I'm going to try this out. How do we actually look out for the charts that we actually put up? So we'll do a very systematic way, and it's the same for all the charts that we put up in the community. So there's actually three things that we usually do. We pick a coin first, and then we will look at this 1, 2, and 3. So the first one, we try to find any breakouts that we can trade, because breakouts tend to be more explosive and it's usually unidirectional. So once it breaks out, usually you will just continue going upwards. There's a lower chance of it ranging or even reverse. So is there any way that we can trade breakouts? So we can look for long time frame patterns like W patterns, head and shoulders, inverse head and shoulders, cup and handle wedges. So once you do that, you want to see what's the projected potential growth. Basically, it's how much more runway does the coin is projected to have based on previous growth. So we can use the logarithmic growth channel, which is actually just a trio of parallel lines. And the third one, what are the significant levels in this chart? Because you need them to take profit, and you can use them as retracement supports. So you know whether this the trend has really broken down, or is it still valid even though it's just doing a retracement? Is it merely just a retracement, or is it breaking down? So with that, we can use the Fibonacci retracement tool. Actually, also, if let's say you are trading above the all-time high, you may actually use pivots as well, because once you're trading above the all-time high, you can use the pivots to actually calculate what's the likelihood of support. Okay, so the first part, we try to trade breakout. So we try to zoom out on a longer time frame. So this is metal on 1 day. I usually like to start with like wedge, a sloping trend, see if there's any breakout that is possible to trade. Yeah, I like to use this. It's easier to see. Okay, so if you draw a simple line like that, one touch, two touch, three, four, breakout, retest, retest, retest. Yeah, there's a good chance that this may still be in play. Okay, if you want, you can actually even try using this. Okay, so there's probably a pattern that you can trade a breakout of. Okay, so maybe something like that. Okay, oops, okay. So a very conservative target can actually be here. So if it does break out in the next daily candle, this could be your possible target that you can look out for. Okay. So remember, we're just looking out for breakout opportunities that we can trade. Okay. So secondly, if you want to know how much runway does this coin actually have, so we can do that with this parallel channel. But before that, you need to set this to a logarithmic scale. Okay. The usual is a regular, and set it to logarithmic. Logarithmic basically gives you in percentage gains. So coins that have been running for very long uh, will have a more equal kind of looking chart. So what you do is the first line, you try to touch as many bottoms as you can. Actually need this candle here, but never mind, let's leave it there first. And then the top line, we go up. Okay, we actually go up here. And once you have this up here on the top, you can actually try to shift this down, touch the bottom, try to touch it here. Actually, that week we can actually omit. Yep, we can actually omit that week because we are having more touches here. Okay, now shift back to the top. Now let me lock it in place. So now we're doing the second step. Okay, so we're actually doing a second step, which is actually what's the projected growth. Okay, so what does this channel actually tell you? This channel actually tells you that the coin, based on previous growth, will actually have a potential exponential growth in this way. So these are the lows, okay, higher lows and higher highs. So this is actually a good kind of channel that you can actually trade out of. And if you look at it, if I break it down to a lower time frame, so you can see more candles. Let me zoom in. Oops, let me zoom in. You can actually see, even though I only set the top and the bottom lines of the channel, right? See how it actually uh, respects this channel. Once this middle line fails, one whole candle comes down. Means the breakdown was through and through. It tries to work its way up, gets rejected, gets rejected, gets rejected. So this tells us that this middle line is actually significant as a resistance. We get rejected, and now it finds support at the lower channel. It goes up again, gets rejected by the middle. So you get the idea. So basically, this growth channel gives you three lines that are being respected: the top, the middle, and the bottom. So what we actually want to do is, once it's tested support, we can actually once it's tested support, we can actually buy on a green close. All these are good buying opportunities. Okay, so once it's tested support, buying opportunity. So once it's tested as support, buying opportunity. Okay, go to the left again. Okay, and once it's tested as support, buying opportunity. So you actually get an average price out here. Then the next thing, we do sell. So this is really parabolic, but let's say if you have seen this candle uh, reach here, that will actually be a good time to actually sell. Once it reaches the top here, sell. Reaches up the top here, sell. We buy. Once it reaches top here, we sell. Because we always sell towards resistance, okay, and we always buy after support. This will give you a better entry point. So with this logarithmic view, you know when to buy, when to sell, and how much the runway is actually. Okay, the last one is actually significant levels. Okay, we always need significant levels so we can take profit, and we know whether any retracement is actually a healthy retracement or a breakdown. Okay, so a Fibonacci tool, first swing high to the next swing low. Okay, lower than this. Lock it. So what I would like to set is usually basically just all the holes 1, 2, 2, 3, 4, and 5, and then all the 618. So the 0, 618, the 1, 618, 2, 618, 3, 618, 4, 618, and 5, 618. Okay, and I will use also one of the 6.65. So these two 618 and 1 and 65 will actually form this. Is actually the strongest level called the Fibonacci golden pocket. Okay, if you can see on the 4-hourly time frame, look at how how the golden pocket is being rejected, or you see you need a big momentum to break the pocket, get support. Now it's struggling, and once it breaks down from the Fibonacci golden level, it goes straight down. So what does this mean? Strong resistance, okay, became support, and strong and support broken down becomes strong downward pressure. So you can see every time it's always rejected, 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 all because of the Fibonacci golden pocket. Rejected again, long week rejections. Look at all the long week rejections. Okay, so basically this would be considered one of the strongest pockets inside the Fibonacci retracement. So remember to set it to 6.65 and 0.61. Okay, so with this Fibonacci retracement tool, if you zoom out again, let's go back to the daily, right? Go back to the daily. So this is actually the projected growth path. Okay, so you get all your higher lows and all your higher highs. So basically, you try to buy at the higher lows, try to buy at the higher lows, and we try to sell towards the higher highs. So you get a very average entry and profits. And your buying and selling can actually be more scheduled. So looking at this, any buy at nearer to the bottom channel means you have more room to run. So this is actually quite a good time to buy. Okay, of course, other things being considered, looking at your other TAs. Okay, so maybe this wedge, you want to move it properly. Okay, this has to go up a bit if it breaks to the next candle. So your target actually go, it actually lines up pretty well to the top of the growth channel. So okay, so what's the ideal situation? I like to use a simple moving average, 20, 50, 100, and 200. So on the daily, okay, looks like still under. So it needs to actually split the 20, the 100, and the 50 MA. So something, if you can get a green candle close above this, okay, this will actually be a good buying opportunity. So once you buy here, you will have support of the trend and the MA. Okay, so yeah, so that's how you actually read the charts put out by our in our community. Okay, to recap, we do it three ways. First, look out for trade out breakout patterns, so it's more explosive. Next, we need to know the projected potential growth. If I buy now, how much more can this thing run? And number three, I need significant levels to actually take profits. So all these are your significant levels to take profit. So if let's say the Fibonacci level is actually not sufficient to give you take profit in the middle and you don't know where, so the next one, the next tool we could use is actually your pivot point. Okay, so once I turn on my pivot point, there are not many pivot points here because I think it's not listed long enough. So all these levels that you see are actually averaged out for you as significant levels. So even the significant level actually crosses the Fibonacci golden level. So a close above this pivot is also significant. So if you really want to take a look, how does the pivot work? Down to a lower time frame, you see how the price action actually gets rejected and supported by all these pivot levels. Rejected, support, rejected, supported, supported, rejected, supported. Yeah, so all these are actually averaged out levels to look at. So these are actually the pivot points. Okay, yeah, so thank you.